In today's video, I'm looking at my top 4 exits. Hello and welcome to another ACY Securities market tutorial. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing I'm going to be talking about today is obviously my top 4 exits. We're going to go through a couple of different ways or reasons that you might consider exiting a position. The first of these ways might seem a little bit odd, but it's actually exiting for a loss. Now in this instance, as professionals, we don't like having losers. So what we aim to do is actually minimize our losses as best to capabilities that we have. We can't obviously have losses all the time and we can't avoid them entirely either. So quite often you'll find that people do try to avoid them entirely by mitigating or managing the loss as it goes down further into the red. Unfortunately, this doesn't always work. So it's more important to cut off your positions earlier in the piece and let your winners run. So that way you end up making profit in the bag. Now, of course, the idea of cutting off your positions early also indicates to another matter of peace, which is not getting married to the position. So if you do have a trade that you get into and you do think it's going in the right direction, but it's not actually resulting in you actually being profitable, then it's probably the wrong trade to be in. So regardless of that, if it's the wrong trade, it's just simply the wrong trade. Cut it off early, don't take the loss as big as it could have ever been. Looking at the next one to look at is time-based exits. So this is when you might find that an expectation that you may have had for a trade hasn't been met. So I like to set a time limit. Let's say I'm placing a trade on a double top or a triple top pattern, and it hasn't resulted in the price action that I thought was going to occur over a reasonable amount of time. I might be looking at an hourly chart and I've found that over the last 3 or 4 hours, it hasn't actually resulted and price has just gone sideways. If this is the case, then my plan would be to close that position because naturally, whilst the criteria was right for the trade and it suggested that this was going to occur for a profitable position, it didn't end up happening. And so therefore, I have to reevaluate the situation and consider closing that position regardless of whether it's in a winning scenario or a losing scenario. Now naturally, all of these things are conditional. If the entry criteria is no longer valid because you've had time elapse or perhaps it's ended up going in a different direction to what you initially presumed, then the chances are it's probably a good idea to exit. So much like exiting at a loss, a time-based exit might result in a little bit of profit, but it could also result in a loss. Either way, it is better to get out earlier rather than later when you're not quite sure what the market conditions are anymore. This one is exiting at a profit. It may seem obvious, but there's a little bit more to it. And you might be saying, well, Alistair, isn't the whole idea of the game to be trading for money and to be making wins on the board? Yes, you're absolutely right. But there's that little bit more to it means you need to have a reason for your exit. There's no point getting into a trade if you're not quite sure where it's going to go. So obviously, if you're not sure where it's going to go, it could go anywhere, which means you might end up exiting at a loss instead. Important measures to make are having that expectation on what the actual distance is you're going for. If you don't have an idea or you don't have an estimation on where you think price might be about to head, then a good way to get around this is to use something like a risk-reward ratio, where you can have a set fixed take profit and a fixed set stop loss. Now, obviously, you need to be a little bit flexible with your take profits because you might want to let that trade run for a lot longer than you anticipated. So naturally, have a plan, but it's important to still remain flexible. If you don't have an ideal target, move back to the risk-reward ratio idea. If you don't want to use that either, try and use something like a trailing stop where you can just trail it up behind price as it moves along. Naturally, you might consider using something like 30 pips behind price, and every time you get a new swing high, moving that trailing stop up with it. Of course, you can use indicators as well if you're not quite sure. Something like an ATR stop, or even a simple moving average at different times with a longer time frame on it. This might help out a little bit. Some little strategies that might help you find the ultimate position for yourself to eliminate some of those positions you exit at a loss for. Out of all the strategies that I've shown you today, this is probably one of my favorite. It takes a lot of the decision making out of the process for you. And keeping things really simple in trading is absolutely important to help you focus more on the market as opposed to what you're actually doing. It's one of the reasons that trading plans can be so effective. It means that you don't have to think about what your next actions are going to be. Letting the market pick the exit for you, however, allows you not to have to worry about where you're going to be putting that take profit, or if that risk-reward ratio is accurate, or even if it's been too long a time since you initially decided to enter the position. It allows you to employ a trailing stop to maximize your returns. And you don't need to worry about if the price gets closed out, because that's the whole idea of it, triggering the stop loss and allowing the market to exit the position for you instead. Now, one of the important factors when it does come to using this is that you need to let it breathe. Whether that means you use a trailing stop that has some level of pip variation, whether that be 30 pips and then moving it up to each swing high, or if you're going to use an indicator such as an ATR stop. Either way, whatever solution works for you the best is going to help you maximize your profit and let those profitable trades run. Now, if there's anything from today's video that you would really like to get in contact with me about, then please feel free to shoot me an email at talktoal@acy.com. And of course, I hope that these strategies are really going to help you moving forward. Naturally, give them a go on a practice. If you don't have a demo account, feel free to jump on our website here at ACY Securities and get yourself one there. You'll be able to put these to maximum effort, and as opposed to using and playing with it just in theory, you'll be able to put it into practice. Now, of course, don't forget to like and subscribe this video so you get more great content from me and ACY Securities in the future. Have a great trading day ahead.